Is a stock's incredible report card enough? Enough to make it immune to a market, grappling with recession jitters. Today, we're diving into Reddit, RDDT, to explore exactly that. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Using our research captured on September 04, 2025, it's about 07.24 a.m. ET, this deep dive into RDDT is designed to give you the edge you need for the day ahead.
Right, and if we connect this to the bigger picture, well, futures for the S&P and NASDAQ are ticking up slightly this morning, so some cautious optimism maybe, but there's definitely a storm brewing.
What storm? What are we seeing?
Well, economists, Moody's, UBS, they're flagging high recession risk probabilities. They're pointing to things like stagnant consumer spending, a cooling labor market. It's not great. And today's data deluge, all those employment numbers, has the market just kind of holding its breath, waiting. It really feels like we're teetering on a knife edge.
Okay, yeah, that's a pretty grim macro backdrop. So amidst all that caution, What did Reddit's Q2 report card actually show? Was it good?
Good. It was stellar, actually. 45 cents per share earnings. And get this, a jaw-dropping 78% year-over-year revenue surge.
78%? Wow.
Yeah, investors absolutely loved it, sent the stock up nearly 5% last session. Plus, the company's aggressively hiring for its small business ad team.
That's a strong signal, right? They're pushing hard to monetize that huge user base.
Okay, a 78% revenue surge is phenomenal, especially now. How are analysts reacting? I mean, are they all just jumping on the bandwagon, all bullish?
Mostly, yeah. Most analysts are bullish. About 60% have it as a buy or strong buy. And the fair value analysis suggests it's undervalued too. Over $246 versus, $223 currently.
Right.
But, and here's where it gets really interesting, a new strong sell rating just popped up.
Oh, a strong sell. Exactly. So it creates this genuine conflict. It's not just a battleground stock anymore. It's like a test case. Can Reddit's fantastic internal growth, that user-driven story, can it really overpower this increasingly grim external economic narrative? It forces you, as an investor, to decide. Do you bet on the company's unique story, or do you bet on the overwhelming tide of macro fear?
That sounds like a classic tug of war, a really tough call. So with these impressive Reddit numbers hitting those macro headwinds, what's the market's pulse telling us now? Do the charts, the technicals, offer any clear direction here?
Well, what's fascinating is just how split the sentiment is. It's kind of wild. Look at the options market. The bulls are running rampant. Very low put-to-call ratio, 0.38.
0.38, okay, so heavy on the calls.
Right, meaning options traders are overwhelmingly betting it goes up, buying calls over puts. There's a real focus on that $220 call strike price. Yet, flip side, bears hold a hefty 18.11% of shares shorted.
18% short interest, that's significant.
It is. And it sets up a potential squeeze, maybe 2.5 days to cover. If things turn against the bears, they'd have to buy back fast. Could cause a sharp spike.
Okay, so options say up, short interest says risk is high. What about the actual price action? Let's look under the hood.
Yeah, the technicals paint a truly mixed picture. I mean, really mixed. The long-term trend's still firmly positive, which is good. But the short-term trend has gone sideways, flat. And an adaptive trend-following tool we watch, it actually flipped negative.
Flipped negative, okay. Not great for the short term then.
And crucially, volume indicators. They show money flowing out of the stock recently.
Outflows.
Yeah, suggesting some distribution, maybe institution selling. And momentum, clearly losing steam. Short-term energy is fading, dipping below its longer-term average. Now, after some wild swings, volatility is calming down a bit. Price bands are tightening up.
Consolidation.
Exactly. Signals consolidation. Like a period of calm before, potentially a significant move. But, and this is key, the direction of that next big move, definitely unclear right now.
Wow. That is quite the standoff. Different signals pulling every which way. So what does this all mean? What's the verdict for our listeners today?
So pulling it all together, our final analysis points to a wait-and-see approach. You've got Reddit's blockbuster fundamentals sailing directly into what feels like a macroeconomic hurricane watch.
Right. Fundamentals versus the storm.
Exactly. And the technicals confirm this standoff. The stock's taking a breather, momentum's waning, volume suggests distribution, sentiment is completely split down the middle.
Okay, wait and see. So for your game plan today, what should people be watching? Keep an eye on the pre-market range. The key battleground, it seems, is between a recent support around $208 and that pre-market resistance just above $224.
Those are the levels. A decisive break below $208 could signal the bears are winning, maybe targeting $200 next.
Okay. And if it goes the other way?
Conversely, If the bulls can push and hold above $224, then maybe those strong fundamentals reignite the rally.
Got it. $218 support, $224 resistance, key levels. So, wrapping up, is Reddit a buy? I mean, the fundamentals are screaming yes, aren't they? But the market, the technicals, the whole environment, it's whispering not yet. Yenta, yes. It seems the stock, kind of like its own platform, is waiting for the community, the market community, to decide which way the karma flows. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next deep dive.